Welcome to the Whitwam Wealth Real Estate Podcast. Today, we're going to be discussing home lending.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam. I'm glad you joined me today for this episode of Home Lending. At some point, as investors, we'll likely need a good conforming lender to work with, whether it's for our own home or to aid our retail buyers in purchasing our assets. Today, I've invited Christian Wohl of Barrett Financial and Home Sweet Loans to join me on the podcast. Christian, welcome to the Whitwam Wealth Real Estate Podcast.
Thanks, Scott.
I'm really glad to have you here. I've been kind of looking forward to this conversation.
As have I.
Well, let's jump right into it. I've got some questions I'd like to kind of ask you, but I think first off, the first one should be, can you share a little bit about your experience as a lender?
Absolutely. So closing in on about 5 years in the industry, came straight into the broker world and absolutely love it. There's nothing like being able to fit every lending box for somebody, no matter what the scenario is. Everything from multi-million-dollar homes to tiny homes and everything in between.
Right.
Makes it exciting.
Well, we all have kind of the story of how we got to where we were. So you said you started 5 years ago. Mm-hmm. What was the process? What made you say, hey, I want to get into this wild, exciting world of home lending?
Yeah. So a friend of mine that's in the industry had been recruiting me for a couple of years, and I had been traveling in my other industry as a software consultant, helping dealerships. Didn't want to travel anymore. Just wanted to be at home with my family a bit more. And when March of 2020 rolled around, kind of a funny date on the calendar, I decided I think now's the time to make that move. So I came over and never turned back, never looked back. But it was a fun time trying to tell your wife, hey, I'm gonna leave my guaranteed salary plus commissions, right, with benefits and matching 401k and all that to go work for myself and start my own business.
Well, you and I have worked together on a number of deals, and when I think about what you talk about, March 2020, when COVID hit, because when COVID hit, everybody in my sphere of influence looked at the market that had already the numbers weren't good already coming out of 2019 as far as the interest rates, the short-term lending rates, some of the economics, and we thought there was going to be a little bit of a pause anyways, on at least the investment side of the industry. And then we hit March 2020 and COVID gets declared. And we thought, okay, this is it. This is going to put the brakes on it. And it did just the opposite.
Right.
The real estate industry kind of went wild. But it's a big step to go from a corporate job where you've got guaranteed income and then come over into home lending. So there must be a why. I mean, there's got to be a story behind why you'd make the jump into, becoming a lender, a mortgage lender for.
Absolutely. Yeah. Thank you for asking. So a couple of things. Number one, I'd always wanted to work for myself. I have entrepreneurs all over both sides of my family, farmers in North Dakota going back more than 100 years. And when I bought my first house in the early 2000s, I didn't understand my mortgage, and I got pushed into a bad mortgage, and my rate adjusted quickly, and then it adjusted again, and very quickly I couldn't afford my home, and I had to sell it. And luckily, an investor came and bought it. And I was able to get out from it and walk away with a very small amount of money. But that's gutting when you work very hard to buy your first home and then you find yourself in a situation where you need to sell that home.
Right.
So I thought long and hard about why I was going to get into this industry. And when I made the commitment to get into it, it was, I'm going to help people. And I'm going to make sure they understand their mortgage and how it works. And we're going to have a plan for it so that what happened to me does not happen to them.
Well, having a good mortgage lender is very important because of that. As a real estate investor, over the years, I've been doing this since the late 80s. And we have bought a lot of houses because people had bad lenders. They got them into some kind of loan that they didn't understand, and then all of a sudden, rate adjustments, terms change, balloons hit, these kind of things that when you're buying the house, you think, 3 years is forever down the road, 5 years is forever down the road, but eventually 3 years and 5 years gets here, and then people are calling people like me who come in and are the solution. You've got a problem, we're the solution, and generally that means that the homeowner is losing on the deal. Not because we're trying to steal the house, but we've got expenses, we've got employees to pay, we've got profit that we have to make, and having gotten wrapped up into some kind of bad mortgage vehicle, is like driving an unsafe car down a side of a mountain.
Right.
You want to put the brakes on, but you can't. It's too late, and you're going to crash, and then somebody has to come in and rescue you. So it's noble that you said, hey, look, this happened to me, and I want to keep this from happening to other people. So if I get involved here, I can be better at educating. And I know you do a good job with that, with educating people who are borrowing, answering questions, being available, which makes you different than most lenders out there. I'm not going to say all, but most lenders out there don't take the time to do that. They're just like, well, just trust me. This is how it works, and they're more interested in getting a check than actually helping their client. So, what is your current focus then in this area right now?
Yeah, it's much more than just a rate. Do I get them a good rate? Absolutely. But it's much more than just that. It's understanding all the different parts of their mortgage and all the different options that they may have, and an exit strategy for that.
Right.
If this is a short-term move to help them acquire the property, and then from an investor perspective or a first-time buyer perspective, perhaps we just need to get the property. Great. And then what's our exit strategy from this loan to get you the next loan? That's often the situation, right? So education is one of the focuses, and the next is just learning and staying up on all the current products that are out there. I've got 150 lenders, Scott. They all don't do the same products,
right?
Which is wonderful, because I can do
well, I get that question. Hey,
Yeah.
what is going to be my rate? What is going to be this?
Yes.
And I have to say, call Christian. It's like, keep me out of this, because it changes so fast.
Sure.
And so often.
Yeah, and typical garden variety, VA, conventionals, FHAs. Yes, I do those, absolutely. But more, obscure lending, bank statements, DSCRs, no ratio loans, all kinds of, for different types of products, for different folks, absolutely. And depending on how much they're putting down, credit score, reserves, a lot of different variables that'll help them back into a rate. Do they want to take the free rate? Do they want to maybe take some lender credit and a little higher rate,
Right.
which may make sense to help with closing costs? Do they want to buy down their rate? Just based on the
Right.
exit strategy for this particular
Well,
property.
yeah, and you got to have those conversations with them, because depending on how long they're going to be in the home,
Yes.
all those things make a difference.
Yes.
So that's why you just can't say, well, yeah, this is
This is
what
the
you-
rate. Yeah, it's much more complex.
Yeah, especially if somebody has been transferred. Let's say somebody got transferred here, and they say, hey, look, they're going to transfer me here for 3 years.
Great.
I'm going to buy a house.
Great.
So now
we got a plan.
Yeah, so now
Yes.
what benefit, or do I buy the rate down? Does that make sense? Do I take the lender credit?
Yes.
And figure out what that is worth over the 3-year period. So
Correct. And
yeah, so a lot of lenders don't do what you're talking about.
Yes. Right. And that's the wonderful piece, is being able to talk folks through that. Everybody from first timers, that may mean that we're going to go through it a few times,
Right.
Because conceptually it's new, and that's okay. Let's talk through it. To the most savvy of investors that are going to understand and ask the questions that are most important to them, and let's go through that too.
Well, what's amazing to me is all of how the programs have changed. When I got started in the late 80s, early 90s, you had conventional, which required at least 20% down. Then you had FHA, and then VA if you were former military, and that was pretty much it. Oh, there was USDA, because we actually bought a home with USDA's their zero down program, but it had to be in a specific area. You had to be in a specific location in order to do that. But now they've got programs like down payment assistance and those kind of things. Talk a little bit about some of the special programs that may be available.
Yes. So affordability has become a big question, right? As the cost of real estate has moved up. I have lenders that will give you, and the state and other programs, grants that will give first-time home buyers down payment assistance. Even the definition of what qualifies as a first-time home buyer has changed here in recent years. So if you haven't owned a home in the last 3 years, you are now a first-timer again.
That's really interesting.
Come on in.
On the brokerage side of things, sometimes I'll get that that conversation. Are you a first-time home buyer? No, I owned a home 5 years ago. Oh, hey, well, you're a first-time home buyer. You need to talk to Christian.
Yes.
It's like,
right.
So you need to know what those programs are. Now, on the down payment assistance side, just because we're here, we like those sometimes for when we're selling our assets, and you'll have a buyer that comes in and they're looking for options. Hey, we'd like to buy this, but maybe it's a little over our head, and you find out that there's some down payment assistance programs. Do they have to pay back those down payment assistance? Are they forgivable? How do those work?
In some instances, they do. I have a lender right now that is forgiving the down payment assistance on FHAs immediately after funding.
Wow.
Which is a fantastic program.
Yeah, absolutely.
Yeah.
Absolutely. So, okay, one other lending type that we haven't touched on yet that I'd like to ask you about, because and that is refinancing. Obviously, generally you see when interest rates tick down a little bit, people are like, well, maybe now's the time to refinance. Maybe it's time to do a HELOC. With Home Sweet Loans, can you guys handle and help people with those type of loans?
Absolutely. Do HELOCs, do refinances all the time for various reasons. Sometimes folks bought when their credit score was a little low, so they had a higher rate at that time, and now their credit score is higher. So it may make sense to refinance now, even though rates may not are historically still a little higher than they were a couple of years ago. Perhaps they want to take out a HELOC to do work on their house. These are easy for me to do. I can get done typically in a week or so.
Right.
I helped a gentleman this last week. He wants to redo his driveway, bathrooms, some other things in the house.
Right.
So,
so there's no confusion, a HELOC is a home equity line of credit.
Yes.
So that you take part of your equity out of your home.
Yes.
That
We
you
don't
can use.
touch the first rate.
Right.
First rate stays secure, right? So if
Yeah,
you've
so
got
if you
a
have
nice low rate.
if you have 3% on your first, you
Yeah.
can still do a HELOC
Yes.
to take money out.
Right.
Okay, well that gives some options sometimes, and sometimes for our investor students, we actually encourage them to take a look at their equity in their current property if they need cash in order to invest. Now, obviously, I teach pretty significantly how to buy homes with no money down, but you can't buy every home with no money down.
Right.
And so sometimes the home equity, in fact, as you and I have a mutual friend that used a HELOC in order to buy a business.
Okay.
And he used that to take the money
Yes.
out of his house, and he used you to take the money out of his house and buy a business with it. So, obviously, on the refinance side of things, that's a great option.
Right.
When there's an opportunity and you're like, well, I need $100,000, where do I get it? And you look at your house and you go, well, that asset's been appreciating all the way, even though the real estate economy has been bad for 2 years, that house has been appreciating that whole time. So, it's a good option.
Be your own bank.
Yeah, be your own bank.
Right. Yeah. Create your own terms, work with the lender that you trust, and be your own bank.
So tell me a little bit about Barrett Financial, where you work. I know that you have mentioned to me that there's certain states that you're licensed in, but does that mean you're limited to those states? How does it work with Barrett Financial?
Yeah, so Barrett's grown quite a bit. They've been around about 20 years, a little over 20 years. I'm personally licensed in, I think, 10 states I renewed in this year that I've been doing business in, but as a brokerage, we're licensed in 49 states. I can get a loan done in just about every state. Even if it's not personally under my license, I can use the home office's license in if I'm not personally licensed in that state. If it looks like we're going to do more than one transaction, I'll probably just pick up my license in that state, though.
Right. Well, then it would make sense.
Yeah,
but
for
people
sure.
would still be able to work with you. So if they're buying in multiple states, they're investing in multiple states, they could work with you as their central lender point of contact, and you could help manage whether you're licensed or whether it's another Barrett office. You could help coordinate all that.
Absolutely.
Well, that gives you a whole lot
I
of
do it all the time.
that gives you a whole lot of flexibility, and obviously Phoenix is probably one of the toughest markets, and that's where you and I are in the Phoenix market. Or toughest real estate markets for investors there is in the nation.
Right.
So a lot of the people who live here, a lot of my investor friends who used to invest heavily in Phoenix, they've moved to places like North Carolina, Georgia, Nevada, and they're doing investing out of states. And those are all places that you could either work with or are licensed to be able to help people in.
I am, yes, and I've got other folks too in Ohio and Michigan and Alabama and Louisiana and some other states too, New Mexico and some other states too. So yeah, there's investors moving all over the country.
Well, the neat thing is some of these other states too, you don't have to go very far to get outside of the conventional terms and find yourself in a USDA district too.
Correct.
So if you were, let's say that somebody wanted to relocate to Tennessee, they may be able to use USDA to buy their property there.
Right.
And then if they needed to, refinance their property here or wherever they're at into an investment property. And,
Correct.
And do some of those kind of things. Well, that gives you, a whole lot more, I would say, coverage than most, lenders that are around, which is why I like working, with somebody like you, because, you're able to help people, whether they're here, or whether they live outside of the Phoenix area. And a lot of our coaching students, they're all around the country. It gives some options. Now, just one last little follow-up on that before I move on. If somebody, say, was going to borrow in a state or looking at buying a couple investment properties in a state you're not licensed in yet, they could still work directly with you, and you would facilitate all of that. They wouldn't just be passed off like if they were using one of the big box lenders and just get passed off to another office.
No. I can typically pick up a license within a state within a couple of weeks if necessary, or I can use the home office and all of the resources through the home office to facilitate the loan. Not a problem. Yeah.
Okay. Well, we're running down on time, but let me ask you this one last question. What are some of the common misconceptions that you find from borrowers who come into your office?
Yeah. There is a lot of misinformation, I think, out there, and I think a lot of it comes from their family and friends too, that they need to wait for rates to come down to buy. And I think you hear that probably a lot too.
Yeah.
And we know that it's just the opposite of that the right time to buy is when you know that you're going to stay in a community for at least 2 or 3 years. Right. Nothing in life happens without a plan, and the same thing with your living situation. Buy when you know you're going to live in your community. You don't buy based around a rate. You don't try to time the market, right?
Well, yeah, that's dangerous when you're trying to time them.
Yeah, same thing with investing for your future and your retirement. You start throwing money into that fund to plan for your retirement. It's the same thing here, because you'll always be able to refinance down the road and improve your position on your rate and your plan, like we discussed earlier. Don't wait. Don't listen to your family, the media, your neighbors that maybe had a different experience years and years ago. Come talk to an expert.
Yeah, and I don't know about you, but I bought a lot of stuff at 10% and above.
Sure.
And, it's really easy to go, oh, I waited and got a better rate, but you could be on the other side of the thing, go, you waited and now rates aren't as good. Mm-hmm. So buy the house that you like, buy the house that you forward makes sense. And you're going to be surprised because typical appreciation in real estate is 3 to 4% per year. And that's going all the way back to World War II. Mm-hmm. And so, you are going to be building equity. Even if you're paying a little bit higher interest rates, you're going to be building equity. So again, timing the market doesn't seem to work really well. I know that Eric's going to overlay on the screen for us your contact information, but how is the best way for people to get in contact with you if they'd like to work with you and Barrett Financial Home Sweet Loans?
Yeah, my website, sweetloans.net.
Okay.
Is the best way. My phone number's right there. There's a red button that says talk to me. You can click and grab time on my calendar right there as well if you'd like to schedule time with me. My Instagram is Christian Knows Mortgages. You can find me there as well. Okay,
beautiful. And that's on the screen, so you can certainly to go out there. I encourage you to contact Christian Wohl at Barrett Financial and Home Sweet Loans. But we've come to the end of the time for this week's Whitwam Wealth Real Estate Podcast. I want to thank you for taking time to join us on the podcast today. Be sure to subscribe today and be part of our growing community. And leave us a review. We'd love to hear from you. If you have any questions, we'd love to get those and be able to answer those. You can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, iHeart Podcast, YouTube, or wherever you enjoy listening to podcasts. This is Scott Whitwam. Be sure to join me on our next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.